Welcome to our channel. If you want to refinance your mortgage, follow these step-by-step instructions to work with your bank and reduce payments. Step 1. Check current mortgage interest rates to see if refinancing makes sense. Generally, refinancing is worthwhile if you can lower your rate by at least 0.5 to 1 percentage point. Step 2. Review your credit score and work to improve it if necessary. Higher credit scores qualify for better interest rates, potentially saving thousands over the loan term. Step 3. Calculate how long you plan to stay in your home. Refinancing has upfront costs, so you need to stay long enough for monthly savings to exceed closing costs. Step 4. Contact your current lender first about refinancing. Many banks offer streamlined refinancing for existing customers with reduced documentation and lower fees. Step 5. Gather required documentation including recent pay stubs, tax returns, bank statements, and current mortgage statement. Having documents ready speeds up the application process. Step 6. Get quotes from multiple lenders, including your current bank. Compare interest rates, closing costs, and loan terms to find the best overall deal. Step 7. Decide between lowering payments or shortening your loan term. Refinancing to a shorter term builds equity faster but has higher monthly payments than extending the term. Step 8. Review the loan estimate carefully before proceeding. Verify the interest rate, monthly payment, closing costs, and loan terms match what was discussed and agreed upon. Don't forget to like this video and subscribe to our channel.